Today I want to talk about VTSAX versus VTI. I see a lot of chatter online as to what the best method of investment is. I don't think you can go wrong with either. There is a 0.04% expense ratio for VTSAX, and I believe it's 0.03% for VTI, so it's like 1/100% less. So people would question, why would I invest in VTSAX when I can invest in the ETF VTI and keep a little bit more money towards the latter part? And I did some research because it didn't really make any sense, because VTSAX is the standard. VTI is an ETF, so it uses the indexes for VTSAX and basically is just like a clone of VTSAX. So if it's not the original, the fees are lower. It's because it's an ETF. Why would you invest in one versus the other? For me, there's a couple of scenarios that you can play out here. When I try to invest in VTI, you definitely need to have money loaded into your Vanguard account in order to do so. So you need to have that fresh capital that's ready to go inside your account, while VTSAX can just connect to your bank account and it will invest. If you invest like $50 or $100, it's just going to do that in the next calendar day and then charge your bank account. So you don't need to have freshly loaded capital in your account in order to invest in VTSAX inside your Vanguard account versus VTI, where you need to have that freshly loaded capital. There's an option to change all your VTSAX holdings to VTI, and you can only go one way. So if you change all your VTSAX holdings to VTI, so that's a one-way swap, you can't go back. So it's like a permanent thing. So if you wanted to invest in VTSAX again, you'd have to either sell and then rebuy VTSAX, which would incur some kind of tax penalty, or you just have to freshly start VTSAX investing over again. I ran across this article called The Black Hole of Capital Gains ETF Swap Funds to understand exactly why the ETF values or the ETF fees are lower, and they can use the indices of the main fund and charge less money. So I'm going to scroll down to this page, and I'm going to also propose an argument as to why I will stay with VTSAX. I don't mind VTI, but I'm trying to future-proof myself, and 1/100% is not enough for the long-term risk, in my opinion. So on page 6 of this, and I'm going to link the article below, the paper below, I'm just going to read a couple of paragraphs and then we're going to discuss. It says, ETF share classes of mutual funds. The Vanguard Group pioneered one of the first ETF tax strategies driven by Section 852(b)(6) in the early 2000s by structuring its ETFs as a separate share class of various mutual funds. For instance, when an investor purchases shares of Vanguard's total stock market ETF, VTI, those shares are a separate share class of the Vanguard Total Stock Market Index Fund, VTSAX, which owns the investment securities. So VTSAX is the broad one, and VTI is separate, but it uses the same indices as VTSAX. And the next paragraph is very telling. It says, this capital structure enables the benefits of Section 852(b)(6) to be extended to the shareholders of Vanguard's mutual funds to which the ETF shares are tethered. So in this case, VTI is tethered to VTSAX. When an AP requests redemption of its ETF shares, the fund manager can distribute appreciated securities tax-free to the AP and reduce any built-in gain in its portfolio for the benefit of both mutual fund and ETF shareholders. Without the redemption activity of the ETF share class, the underlying mutual funds could generally not eliminate built-in gain without selling their appreciated securities. So this is some sort of tax loophole that Vanguard pioneered in the early 2000s to allow their ETFs to be as competitive as possible and share the same kind of tax-free selling structure as whatever they were tethered to. So this is the reason why you can sell your VTI shares and instantly assume whatever position you have without getting taxed, like double taxed. So you're able to sell, and you pay your own tax, but Vanguard is not passing on an additional tax, which would make it more expensive than the actual asset that it's tethered to. So VTSAX When you sell, it closes at a certain period. VTI, when you sell, it's like instant at that particular time. So you sell at 2:30 p.m. Eastern Standard Time, it's going to sell and realize that profit or that loss at 2:30 p.m. When you sell VTSAX, it's at the close of the calendar day when everything gets amalgamated and all funds are realized. So I did some research, and this section 852B6, this is a Vanguard thing, and other companies are trying to do the same thing as well. This was passed in the early 2000s. However, there is pushback. So I am going to stay in VTSAX because I don't know what the future holds. In 2022, Senator Rod Wyden proposed a specific piece of legislation that would repeal Section 852B6. So ETFs would have to recognize gains when they distributed appreciated securities in kinds to APs. So there is legislation that is floating around there that is trying to push for the repeal of this section. I don't know how popular it is right now, but there also are policy papers that are being written that also say the same thing, and they've been passed to Congress as well. And it's a loophole that certain representatives, certain congressmen and congresswomen are trying to repeal. So they have to pay taxes on it. And what happens in the next administration or 3 or 4 administrations from now when they repeal this and you're stuck in VTI? What happens then? Because you can't go back to VTSAX. You can't go back. So if you're actively selling, you're going to have to just assume an additional loss. And I feel like that's 1/100% that you gain from being in VTI will quickly evaporate. So in order to future-proof my portfolio long-term, I'm going to stay in VTSAX. And this legislation may be passed, may not be passed, but when you calculate that 1/100% on a portfolio over a decade, 2 decades, 3 decades, it's not something that I'm really sweating over. It's not something that I really even care about. So you can do as you please, but just know that you may get trapped. And I am trying to do this to prevent being trapped. And I don't know if this is a prudent strategy. I wonder what you think. If you have any comments, leave them below. That's my rant. And invest in VTSAX or VTI. Both of them are good. I'm trying to maximize my profits and ultimately future-proof my portfolio. Have a great day.